Hello, welcome to Property for Chicks, our latest podcast. Today we're going to be talking about all things money, and I don't mean online shopping because I think we've all got that worked out pretty well. But we're going to be talking about financing, and we have a finance specialist on today. Firstly, I'd like to welcome my co-host Rachel. Welcome.
Hi everyone, thank you Karen. Welcome Renee. Very excited to hear what you've got to say today. We've got some great questions for you.
We do. And to all our viewers out there, those who are watching, if you have any questions on home loan and financing, just shoot us a message on the Facebook page and it will come up on our screens here. So Renee, welcome. You're our finance specialist who's going to talk all things money today. If you'd like to give us an update on how you got to here.
Sure. Thank you very much for having me today. Look, I have worked in finance now for nearly 19 years, so it's really all I know, to be quite honest. I started my career working in a bank back when they had yellow pages. I looked under B for bank, and I started with Westpac, and I pretty much haven't looked back since then. Done a number of roles, working in a branch and not in a branch, but I find myself now self-employed finance broker and absolutely loving it. I got the flexibility to choose any bank I want to use on my panel. If it suits the client's needs to go with bank XYZ, I can, because I don't work for a bank anymore. So that's pretty much how I landed here, just starting with the banks and then working my way through to find out what role I really enjoyed and took the experience along the way.
Very good. Well, I met Renee many, many years ago because I learnt very early on, don't go to a bank if you need a loan. Go to a mortgage broker or a finance specialist. And along the way, that's where I've met Renee, who has waved her magic wand for me many times. So thanks, Renee.
Thank you. You're welcome.
Okay. Right. Well, let's get into some questions. I think one of our biggest ones is, what's the basic loans? What's our deposits we need nowadays? Have things changed much?
Yeah, look, it's certainly a question I do get asked a lot, nearly every day, is how much money do I need to get started? And the other question I get asked just lately is it true the banks have stopped lending? So let's start with the deposit. You may not be aware, but a bank will generally ask you for a minimum of 5% deposit of whatever it is you're buying. So if you like a house on realestate.com for $400,000, 5% of that is $20,000. Now that's a minimum. So in addition to satisfying the bank's deposit of 5%, you also need to factor in things like a conveyancer, building and pest inspections, council searches, government stamp duties, title fees and registration, bank checks. There's all other associated costs that come with buying property. So when we say a 5% deposit, we actually mean that as a minimum. And what I find more accurate figure is if you aim for either 7 or 8% of what you're buying, it'll cover all those other buying costs. Okay. Now, in the event that you don't have cash or you don't have that full 7 or 8%, you can use a family guarantee. And this is something that people may have heard of but don't really understand. So that is where if you have a family member, and it usually is a parent, or it could be a partner, or it could be a sibling, and they already have property with good equity in that property, we can utilize that equity instead of a cash deposit. And so when we talk about family guarantee, it's usually the property that we're using as a guarantee to secure your deposit because you're lacking on the cash side of things.
Okay. Do you still get a lot of people doing that, mostly young people doing that nowadays?
Look, yeah, in the demographic I work with, I don't see a lot of it, but I certainly do see it. I'd probably use guarantee, if I'm writing maybe 10 or 15 loans a month, I might see it once a month. Generally speaking, most people these days are well educated enough to have cash. With finance so readily available in your back pocket and your smartphone, they generally have already done a bit of research before they're picking up the phone to tell me, hey, I want to buy a house, how do we get started? So they've already got a deposit generally. It might not be enough or it might be really great, but most people will come to me with cash before before they're ready to buy a home.
Yep. Very good. All right. Oh, I just lost my place.
Well, the other thing I was going to mention too is I mentioned before that some bank, there's rumours saying a bank's still lending. Yes, they are. And that seems to be
my question, Renee.
Yeah, the COVID-19 question. And look, yes, things have definitely changed. Like I said, I've been in this game for nearly 19 years, and I've seen some unprecedented changes right now with bank policy. And, having 45 lenders on my panel, and I'm getting all their email changes just about weekly, it's a lot to keep up with. So good luck to the average consumer that doesn't do it every day, because there is a lot of changes right now. What we're seeing is predominantly lenders have had to tighten their lending policies. And so that we're seeing things like if you are a casual employee, where they're shading that a little bit. So where you might say, look, at my average earnings and the last month has been XYZ, then we annualize that over the year. We're now looking at the previous 6 months average rather than just 1 month. Or we're seeing certain occupations that they won't lend to. So if you work in, for example, some lenders will not lend to you right now if you work in retail, hospitality, tourism, aviation, gaming. Obviously, they were the industries that have been hit the hardest right now. So, certain occupations they won't lend to. The banks that will lend to them are having them maximum lending at about 60 or 70%. So there's just some changes that everyone needs to be aware of. So it's really case by case right now with every person that rings me and with every bank that I have to call to say, listen, this is the scenario on my desk. Are you still doing that? Is this still in your scope right now?
Yep. Are you busy at the moment?
Yeah, look, I am actually. Since Easter, there's definitely been a run on inquiry. So in March, what I felt was a very, very quiet, somber finance industry. Everyone was coming to terms with the shock of COVID-19, and industry has been shut down in our country, which has never happened before. So I can honestly say, hand on heart, it was a very quiet March. But the good news is Easter, Easter Tuesday, public holidays are finished. People have gone back to work in some way or another, either at home or in the office. But the phones are ringing again, and people are they're buying, they're selling, they're still doing construction loans. In amongst all this wave of uncertainty, yes, there has been industries that have been badly damaged and suffering, but there are industries that are thriving. So, if you look at our healthcare system or our nursing homes, our tradesmen, they're still out there building homes every day. We've still got electricians, still got those services that are still helping everybody else maintain and survive. We've still got lawn keepers that are out there doing their jobs and their bits, and the services that are still working just nicely. You've got childcare, you've got all the government employees that are trying to madly take all these phone calls to help people out right now that are unemployed. So there are industries that are absolutely doing well right now, and they're still keen to buy. They've got their deposit ready and they want to go ahead. You've got people that are refinancing because the rates are so low. They want to get the best deal that they can.
I had a thought, Renee, about, if someone actually went and got approval for finance now, but say they didn't settle in the next 3 to 4 months, are those approvals still guaranteed, or can the banks pull out any time up until settlement?
Oh, Rachel, great question. Look, absolutely. Again, I just have to say uncertain times. Look, if you get an approval this week, it doesn't mean it's current next week. It's that volatile right now. Like, we're seeing some real big changes. So certainly if you're going in for a pre-approval, the sooner you settle that loan, the better. I mean, we saw in February and early March, because we had such a busy start to the year, we had a spectacular start with real estate and things were going really well. But there were a large majority of lenders that actually stopped pre-approvals because they were just so busy with applications, they just couldn't take any more in. So they were only accepting applications for those that were actually buying and had a contract. So the lenders that are now accepting those pre-approvals again, absolutely. My advice at the moment would be I wouldn't put one in unless you know that you're wanting to buy, you're actively on realestate.com and you think you're going to buy in the next month or so, because there's so much change with policy and what's happening. It's just no one's crystal ball's working right now. They're all broken. The world there are none.
Yeah, and maybe it might be just an opportunity for people to get extra due diligence time, or make sure that they have a finance clause in their
Look,
contract.
what we are definitely seeing now that I haven't seen before is, generally speaking, when you put in an application, so you put one in today and it's the 1st of May, but that lender's quite busy. They might not pick up that file for 2 weeks. They'll assess it. It's approved. And then you might settle in June or July. And they wouldn't ask you for any more pay slips or any of that sort, because they've already done their assessment. But what I'm seeing now and over the last month is that exact same scenario. That lender that picks up that file 20 days later, they're ringing me on that 20th day saying, we want one more pay slip as at right now. We want to see, is that person still employed in the last 20 days? And they're doing employment checks. They're ringing employers. Is that person still working for you? How has your business been affected? Are they still on the same wages? Do you think you're going to have to put them off? So that's what I'm seeing now is lenders are actively checking. They're making phone calls to employers. They want the most current pay slip as at time of application. And if it's approved now in May, but you settle in June, they've still got a clause that they can ring you in June and say, I want another pay slip to make sure that before we settle, you're still employed.
They're really doing their due diligence.
We're really checking right now. Yeah. And you be mindful too, the banks now are trying to support customers by putting their mortgages on payment pause. So
well, that was my next question. So we might lead into that, Renee, is about the mortgage relief, and is it as good as they say it is?
Look, mortgage relief certainly has its moment, and it's there for those that need it. So if you're finding yourself without employment or reduced income to what you used to, and you're struggling to pay your bills and keep everybody fed, then absolutely mortgage payment pause can be helpful to put that biggest bill you have, your mortgage payment, on pause. But if you can avoid that, it is strongly recommended that you try to avoid that, because it's not nothing. You're not going to have your mortgage stopped and forgotten about for 6 months. It's still there in the background, accruing interest daily and accumulating. And when you go back to normal repayments, whether it's in 3 months or 6 months' time, that interest that's been accruing every day since then is then added onto your loan. And different banks are doing different things. Some lenders will add 6 months to the end of your loan term. Say you've got 27 years to go, they might give you 27 years, 6 months. Other lenders, for example, that same scenario, if your loan repayments for the next 27 years are supposed to be $1,200 a month, because you took a pause for 6 months, then now you've got 26 years and 6 months to pay it back. So they're going to increase your monthly repayments now, because you've got 6 months to catch up on. So now when you turn back onto the mortgage payments, your minimum monthly might be now $1,800 because you just lost 6 months. Wow. So every bank's got a completely unique policy with whatever they can handle. But absolutely, unless you need to do that, if you're paying extra repayments, then bring it back to the minimum. If you need to go onto interest only, then do that. It's there as a support network if you need it, but wherever possible, if you can get through it without using it, definitely try not to.
Yeah. Consumers
it sounded so wonderful. Banks were giving us a relief on our payments, but at the end of the day, it's going to cost us a lot more money, and the banks are all crying poor at the moment, but they're going to reap it in about 6 months for the next 30 years afterwards.
Remember, the banks are a business. They're not non-for-profit. They're a profitable business. They need to make money. They need to make a margin. They have staff to pay. They've got shareholders that want their dividends. They're there to make business. They're not there as a charity. So, yes, they will make their money from you.
They will. They will indeed.
Yeah.
Just going back to what we were talking about before with putting in an application, on a normal house and land contract, it used to be a standard 14-day finance clause. Everyone, who needs more than 14 days? How long are the banks taking now, just for a normal house? Nothing, not development site or construction, just a straight house and land. Are they, I dare say they're not doing it in 14 days because I haven't seen one go through in 14 days for a long time, but how long are they taking now?
And again, it comes down to lender individuality as to how many staff do they have in the background, or what are their application volumes at the time, and how quickly they process loans. So yes, that has been a hot topic this entire year actually for 2020, because like I said before, it was a really busy start to the year. There was a high volume of applications. We had the government bring out their new scheme for the low deposits. And so there was a lot of inquiry, and the lenders got flooded with volumes. So we did find that the assessment time would normally be somewhat 2 or 3 days, blew out to 15 or 20 days because of the volume that people were coming through. What we're finding now, again, due to COVID, is a lot of our banks were offshoring, and their large call centres, or even the ones here in Australia, the call centres aren't there anymore. They're working from home, or they've had to reduce staff. And so there's not as many people on the ground to actually assess those loans. So yes, the assessment times are taking much more longer than usual. They are protracted. But then you do have the occasional, you've got a couple of lenders, a handful I can think of, where their assessment times are still okay. They're still within 2 to 3 days. But then you've got other lenders that are taking absolutely 3 or 4 weeks. So it is best, before you go buy something, before you put on the contract 14 days for finance, call your broker and ask them, hey, what's my lender timeframes at the moment? Do you think I should put 14 days, or is that unreasonable? Should I be asking for 21 or 28 days? Because there is no normal right now. What used to be 14 days normal isn't normal right now. And it does depend on the circumstance. Is it a self-employed application where there's a lot more involved with financials and depreciation add back? Is it a straightforward PAYG? Does it involve casual income? Does it involve somebody in healthcare that has overtime and allowances and all those other things? So it's really unique as to how much time we need on a finance clause. But most people just go with the standard 14 days, and if we need more, we negotiate with their solicitor at the time. But certainly, generally speaking, they are taking a lot longer than usual right now. There are protracted assessment times.
Yep. Very good. Now, a lot of times when people go to the banks, they get knocked back for a loan. What's some of the worst things to have when you go to have a home loan? I know I usually have to reduce credit card limits. They get thrown at me when I get a home loan, and then you go to get something else and they're like, oh, no, you can't have that. And you're like, well, you gave it to me.
Yeah, look, I'm so glad you've asked that question, because it is something that I personally, I've never really agreed with the whole, here, have our home loan, and by the way, you have to have a credit card as well. And a lot of banks do it with their packaged home loans. You can't opt out of the credit card. It just comes with it. But thank you, due to the Royal Commission, we're starting to find now that opting out option is becoming available. So they don't have to take that credit card anymore. But certainly if you are preparing for a home loan in the near future, spending, that's my big keyword. Watch your spending, your FPOS, your Uber Eats, your tap and go. Banks more and more now are asking for bank statements, and they don't just want 1 month, they'll want 3 or 6 months bank statements, and they can see everything. So it's important that you reduce your spending. Any discretionary spending, if you can pull back on that, it's a good idea to do that at least 3 or 4 months before you go for a home loan, because they are looking at it. And the other thing you mentioned was credit cards. Look, absolutely. Credit card debt or personal loans, car loans, any type of loan that you currently have, that all goes against your borrowing capacity. So depending on what you're earning, if you've already got existing debts, we put that into the service calculator. In most cases, if your repayment is $500, they'll add a buffer to that. It might be 20 or 30%. So yes, you're only paying $500, but we consider that as maybe $550 or $600, and when we put it in the service calculator. So it can really hurt your borrowing capacity. So if you're contemplating, do I buy that new car now, or do I get the house first? get the house first. As a homeowner, once you've got an asset as real estate, people are generally going to give you a better interest rate on a car loan. So if you have the luxury of choice, house or car first, for me, it's a house first, because that car loan will significantly hinder your potential to get that home loan. If you've got credit cards you're not using, why have them? Get rid of them. Those limits, we look at limits, not balance. So I see this every day in my career. People with 3 or 4 credit cards, they use one and they have 3 that they don't use. They're just sitting there dormant. But because their limits are active, we have to put them on the service calculator, and it can reduce borrowing capacity. So if you're not using them, close them, get them gone. That would be my big advice.
Yes.
Or pay cash.
I learned that they don't overly care if you pay off your credit card every month. It was the limit that was always the issue. So, yes.
Yeah, definitely. You could have immaculate repayment history, which is wonderful, but the fact that you've got the credit card in the first place, it might be a $30,000 limit, but you only ever use 4 or 5 every month just for general living. The fact that it's $30,000, we have to put that in the calculator. So if you don't need it, drop the limit to 5 if that's all you're using. It does make a huge difference.
I did have a certain bank say, "Oh, sorry, that card limit is $20,000. That's the lowest we'll go." And I'm like, "Well, I'm going to have to kill it off then, because I can't have them all at that sort of limit. Whether I used it or not, they wouldn't reduce it down. So they'll do everything to catch you one way or another with the home loan, and then you go get a credit card." So
yes. And look, the other thing to be mindful of too is 2 years ago, we changed we didn't, but the industry took a change in the credit reporting. So, and this is another question I get asked quite a lot, is I ask it on my client form, do you have bad credit that you know of? And generally speaking, people think, oh, look, if it's bad credit, I would know about it. Someone's been chasing me for it. But it's not necessarily. So what we're reporting now is we can actually see everything you have, credit card, house loans, car loans. If you have a loan with someone or some type of credit facility, we could actually see repayment history on that for 2 years. So if you've missed a month or you paid one late or here or there, we can actually see all of that. And it now goes towards your credit score, whether it's good, bad, or indifferent. So it's not just the bad stuff that we're now looking at, it's everything. So if you're unsure, get a credit check, get a full credit report. I offer that to all of my clients and potential clients. It's one of the questions I ask them straight off the phone is, do you have a job? Do you have savings? What's your credit look like? If they don't know, we go find out, because sometimes the last thing we want to do is we don't want to be on the back foot when the bank can see something that we didn't know about or we forgot about because it was 2 years ago or 3 years ago and it was far from our mind. And then suddenly we're left standing trying to explain ourselves because we didn't know about it because we forgot.
Renee, we've got a couple of live questions that have just come in. Karin, can you see those there?
Yeah, I've just put Angie's question up on the screen. She's just asked, is there any way I can get a home loan with the 5% deposit? You touched on that earlier on. We just want to go through that.
Good question, Ange. Yes, you can get a home loan with the 5% deposit. There is, like I said, every lender's got their own niches and their own policies. You can, with the government scheme that came out on the 1st of January, that is a big helper for this 5%. So if you only have the 5% as your cash savings and you meet the government's criteria, that is Australian resident, you're under the threshold for income, the property you're buying is under the threshold that they've allowed for, and you're over 18. So as long as you meet the government's criteria, then absolutely the lender's mortgage insurance is waived to an extent, and then the 5% can be used for the bank's policy, but you still need those buying costs. Conveyances aren't free, unfortunately. Council searches aren't free either. So they're those buying costs that we still have to pay for, and it's in addition to the 5% that the bank require. So yes, you can, but you're still going to need that extra $2,000 or $3,000 to pay for those other costs.
Yeah. Well, Ange just wrote back and said, sorry, I missed out a word. It was without. A
without the
deposit. Yeah, she missed that.
Yes,
She
so
missed the
that's the family guarantor topic that I mentioned on earlier. So if you don't have cash, but you've got a family member that has lots of equity in an existing property, what we do is we take that equity and we use that in lieu of a deposit. But when you do that, it means that your income needs to be able to afford the full purchase price. Most people buying a house would have $20,000 or $30,000 cash, and therefore they don't borrow the full purchase price. But if you're not using cash and you're using equity from someone else, then you need to be able to afford the full loan plus all of the government fees and everything that go on top of that. So an example would be, let's go back to buying that $400,000 house. You have to pay a solicitor and stamp duties and searches. So let's say your buying cost might be $3,000, assuming you're a first home buyer and you don't have stamp duty. So now you need to finance $403,000 for that property. So does your income and debts and everything else about you, does it stack up that you can afford that? So that's how you can buy a property with no cash, family member with equity.
Great. Thanks, Ange, for that question. We do have another one from JJ. Doesn't quite cover what we're talking about today with silver and gold. Happy for you to send us any silver and gold, JJ, but unfortunately that's not something I really know anything about other than buying it, wearing it.
I'm not a financial advisor. I'm not a stockbroker. I can't comment on if people are buying or selling silver or gold. I'm sorry.
No, the jewelry store is about the limit of my expertise on that one as well. So, right.
Gold is my favourite colour.
Rachel, do you have any other questions?
No, I'm all good. Thank you, Renee. That was wonderful.
I might just ask one last thing. There's a lot of really, really cheap rates out there at the moment. Does the cheapest rate make the best loan?
Not always, but people are very consumed by rate, aren't we? It's a question that we all love to ask. What's the rate? What's the rate? What's the rate? Yeah, look, I think it's just, I don't really know, but my guess is people ask that question because we're all either old enough to remember or we've got parents that remind us that they were paying 17, 18%. So rate seems to be a question that we ask almost instinctively without even realize we're asking it. But no, it's definitely not always about rate because people are so unique with their circumstances. Sometimes what you're looking for is, it could be the difference between getting a loan and just not getting one at all because your circumstances are so unique that you need somebody that will have lender policies that can say yes to what it is that you're looking for. And their interest rate might be a 0.3% higher than someone else, but at least it's a home loan, stops you renting, at least you get in. Once you've got the mortgage and you're making good repayments and you've been there for a year or two and your circumstances aren't quite so unique, then you can look at refinancing to one of those other cheaper, lower rates. But no, rate's definitely not the be-all, end-all. It's quite often lender policy. Who's actually just going to say yes and who won't? Who are you going to get the approval through? Is it a construction loan? Does that lender do construction? Are they good at construction? Does that lender do casual income? Are they good at it? Do they add back allowances? Do they have offset because you are a very good saver and you want to have offset on your home loan later on? Do they offer you a combination loan? You want some fixed and some variable. You want to dip your toe in both worlds. So knowing what that lender is good at and what that customer wants or needs or think they might need 3 to 4 years' time, it's knowing where they're going to be in a few years and how we can make that fit to the lender that suits them at the time. And for me, rate is definitely not my first thing. My first thing is, what is the client in front of me? Are they self-employed? Are they casual? Are they good credit, bad credit? Have they got impaired credit? Do we need a construction loan? It's always about, what is the scenario in front of me? What lenders do I know are brilliant at those things? And then I start fine-tuning it to rate, fee, policy, time frame. We've signed a contract, we've only got 14 days. Well, I'm not going to take it to a lender that takes 21 days. So there's so many things we have to think of.
Yeah. Well, I think you just answered the question of why should one use a mortgage broker, because different banks weight up different, rental properties can have a different weighting. It's self-employed or your casual work. Another good reason to use a finance specialist is because they know which bank to go and try for in the first place that meets your criteria.
Look, I always tell my clients that ring who have found me on Facebook or word of mouth, or someone at work was talking about you. And no, some people will be brave enough to ask the question, why would I use you? And I applaud them for asking, because everyone's thinking it. So just ask. And to them, I say, well, why wouldn't you? Can you ring your bank on a weekend? Can you call them at 6 o'clock? Will they come to your home? Can you call them when you've just finished a house inspection on a Saturday? Can you call straight through to them without pressing 1 for this person, press 2 for this category? So for me, it's just service. I was the first home buyer once, and I wish I was around then, because I really needed someone to be available for me when I wasn't at work. You can't afford a home loan unless you're working, and then you need to see someone outside of those hours. So for me, it's a service aspect. And then in addition to the flexibility that we offer, it's knowing our product. We live it and breathe it every day, and we don't just do it for one bank, we do it for dozens. Like I said, I've got over 40 on my panel. So knowing who are my go-to banks for self-employed. Do we need add backs? Do we have impaired credit? Do we have construction needs? Do we need a guarantor loan? So it's knowing exactly what banks are good at what, so that you're not wasting your time walking to a bank that's never going to do it. And the amount of loans that I can say I've settled because they've gone to their bank for 25 years, unknowingly, I'll just go back to my bank, get a home loan, be fine. They've been declined. They're devastated. They've come to me upset. They're frustrated. They're angry. And as soon as they tell me their scenario, it's like, well, yeah, that bank was never going to do that. But you've got these other 7 that will.
Yeah. It's the experience too, isn't it, Renee? And you get what you pay for. And like you said, you are offering a service. And it means that your experience and your guidance and your knowledge around home loans and how that all works is priceless.
Well, I say to people quite often, I think I buy, sell and build roughly 5 to 10 houses every week. So that's my experience. You might be buying your first one or your 4th one, but I'm doing it every week. So the amount of experience I have is really, it's priceless, I can tell you so many scenarios I've seen and not seen and learned from experience, so that my clients don't make those same mistakes that other people have done in the past. So absolutely. It's all
one of my first investment loans, I went into the bank, no name, to sign the documents, and the guy said to me, so what'd you use a mortgage broker for? Why didn't you come straight to me? I said, I did, and you said no. So I went to a mortgage broker. It was just simply filling out the application, filling in, like there's nothing was wrong on it. It was just filling it out correctly that, the banks know how to read. And I actually got a loan with that exact same bank through a mortgage broker that the bank had gone, no, don't worry about that. So very much why one should use a mortgage broker or a finance specialist. So look, we've got no more questions out there, so we might wrap it up for now. Thank you so much for coming on, Renee. We'll put your details up on our Facebook page later on today, so if anyone does need to get in contact with you, they can. Thank you so much for coming on. The lovely Rachel, thank you for joining me again.
Thank you, Karin. Thanks, Renee.
And to all those out there, this will be available later for you to listen to if you have missed our broadcast, and we'll catch up to you all again in the next couple of weeks. Thank you, ladies.
Sounds great. Thank you very much.